Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another great episode of We Build Great Apartment Communities, the only place where you come to learn how to take apartment buildings and, yes, turn them into amazing communities. I have another great guest. Now, this guest I'm really excited about. Now, I'm excited about everybody, but in particular this guest because I think it's very rare where we get to hear from a corporate executive, right, live, in this case that has made the transition, someone with multiple Fortune 500 experience. And so going to give us a very unique perspective in some of the business experiences that he's had in corporate America, especially Fortune 500, Fortune 50 also, and maybe even some of the skill sets that he has acquired during that those experiences and how he's been able to map that over to investing, and also, what he's learned, right, that's been different, that has contributed to his success back into corporate America from being an entrepreneur, because usually there are a lot of parallels. Oftentimes it just takes some conversations to be able to recognize what those look like. So today, the great news is we're going to have those conversations today with Raj. We're going to dive into some great stuff. So without further ado, I'd like to welcome our guest, Rajneesh.
Close enough.
Oh man. Okay. Let's do it one more time. Niche.
Yeah.
Okay. Awesome. Now, even though I had a conversation with you about that, I still didn't get it right. And man, I appreciate you at least stepping in and correcting me. There's nothing worse with pronouncing someone's name incorrectly, right? So
don't worry about it.
For that reason, I am so grateful for you being on and for many others, but I think this is going to be a very unique show. So Raj, thank you so much for being on. Let's get into this, right? So you have a very unique background, and I gave a really quick summary. So I'm going to invite our audience into this conversation by allowing you to talk a little bit about your past, your experiences rather, in corporate America, and then of course what you're doing today inside of the world of real estate, inside the real estate space.
So I'm an engineer by training. Then I came to the United States in 2001 and got my MBA. That's why I came here for. And then I had about 20 years in corporate America, I just said. So I was at FedEx, Walgreens, CVS Caremark, Johnson & Johnson, to name a few. And towards the end of those 20 years, I started investing in real estate. First very tentatively and then with more assurance. So I bought a triplex, my first property in 2017. The next year, I bought 6 more units. And then the next year in 2019, I bought 20 more. So I have about 29 units. So I'm not a Robert Kiyosaki by any means. I had great plans for 2020, but who knew COVID would do what it did?
Sure.
So right now, I have my personal portfolio. And I'm also part of a syndication team. My 2 partners and I are looking for, a good syndication deal in different markets. And we have our own investors ready to invest with us. It's just we are looking for a deal which would knock it out of the park because it's going to be the first one. And we want to... And it's just challenging in this climate,
Of course. Hey, but if you don't ask, you never get, right?
That's right. We came close a couple of times, but we are back in the game and we are looking again with a lot of zeal and enthusiasm.
Well, you know what? I appreciate you sharing that. So let me ask a couple of questions about that, right? Because you talked about looking for a great deal. And of course, this is a very competitive market and everyone wants the same thing, right? Which is it doesn't matter how big the gorilla is or how small the gorilla is, so long as the gorilla is strong and can produce a lot of fruit for everybody, right? So how are you differentiating yourself out there from all the 1,000, the 100 other investors that are looking for the same big, strong gorilla?
Yeah, so I have never shied away from competition. I have my partners and I are in this mastermind. We are very diligent about what we are looking for, and even though it's very competitive, we have drawn a line in the sand that this is it, and we would not go any further when it comes to offering up top dollars for a good deal. So we have our discipline, we have our process, and we were looking in certain markets, and since it is too hot right now, so we have kind of started to explore some other markets and some other asset classes. So most recently, we have started to look into the Little Rock market, and the good thing about that market is that unlike other hot markets, it has not boomed or busted. Not as much as other markets. So there's still opportunity in certain places. And then we have also started to look at some alternative asset classes. So that's how.
Yeah, I think, by the way, Little Rock is a really good market, and you're 100% right? I mean, there's just not a lot of activity there, but there's some really good fundamentals in that market that a lot of people aren't aware of. They might be after this show, but...
Scratch it. I didn't say anything.
We'll edit that out. But hey, so I really appreciate you sharing that, Raj. So let's get back to corporate America, right? So you've had the great opportunity to be able to experience how corporate America works. And when I say experience how corporate America works, meaning be trained by, some of the best companies out there, right? Because they put a lot of money into training and developing their staff. And I think some of the value inside of that is it's almost like, what would be the analogy, right? If you went straight into being an entrepreneur, you almost have to build the disciplines yourself. Whereas if you start in corporate America, they help you with the disciplines before you actually go out on your own, right? Because everything is very structured, very regimented. Yeah. And I know this because I went through something very similar. And of course, when you come out, you have some very unique skill sets that usually will help accelerate what you're doing. Not always, but that could help accelerate what you're doing. So for you, what was that, right? I mean, when you started off in hindsight, what were your top big takeaways that you now have been able to use inside of your entrepreneurial ventures?
It's a unique question. I don't get this one a lot. So let me try to summarize what are the best things that I learned over the past 20 years. I think the quantitative approach to solving business problems, that was the number one thing. People skills, communication skills, ability to present complex ideas in a way that people can relate to. I'm not a salesperson. That does not come naturally to me. And
anytime someone says that, they're definitely a salesperson, by the way.
Oh, really? I'm not.
I say that jokingly. Go ahead, Raj. Go ahead.
But see, I cannot imagine on being this side of a cold call. I just can't. And But I understand marketing, I understand finance, I understand IT, I understand, accounting. And since I did a lot of pricing over the past 20 years, I know how to maneuver spreadsheets. And so there is a little bit of personal side, managing persons, hiring, firing, managing people, and on the other hand, managing data, valuations, etc. So when you put it all together, you're right. It set me up in a very nice way for my entrepreneurial stage of my career. Yeah.
So you know what? Here's what's really interesting about what you said, right? Because as an entrepreneur, we have to learn. You're really using multiple skill sets, right? Mm-hmm. You have to have some people skills or else you'll never grow. If you don't have any people skills and you don't know how to hire and build process, then you end up going crazy because you can't do it all yourself. Right? And so that creates a different set of problems. The other side of that too is you can be really, really good with people. You can be great at building process and hiring people. But if you don't understand how to use numbers or financials to make decisions against, then you run into issues there as well, right? You end up running out of cash. So I really appreciate bringing that up, because I think a lot of people think that, when you're building a business or operating a business, you hear a lot of CEOs, for example, I hear this comment a lot that, hey, this CEO or this president or this executive is getting paid way too much money, right? And same thing in the world of being an entrepreneur. I think what a lot of people don't realize is how hard you have to work to produce a result, right? Or add value to create an outcome.
Yeah, 100%. I mean, I don't want to get into the politics of that, but I believe that, but I do believe that your pay is what you're worth. Your property is what you're worth.
Right.
The assets that you paid for that money because that's what they are worth. And now you could be off by a little bit, but nobody's going to pay you millions of dollars if you are not able to add 100 times more value back to the company.
100%.
So, 100%. Yeah. And same thing goes on the corporate side as well as on the business side.
Okay. So let's take that concept and now let's apply it to real estate, right? And so let's use multifamily as an example, because I think it's a really, really good segue. It's a really great segue for being able to add value inside of the space. All right. So one of the comments that you shared was, you get paid for what you're worth. Okay. So let's use an asset, because it's a great analogy, right? A multifamily asset. You buy it for X amount of dollars. In this case, say a couple $1 million. Let's use $10 million, right? Nice round number. And that asset produces income. Okay. So let's use a 5 cap, right? So that asset produces income. Okay. And now in theory, you buy that asset based on an income stream, and the expectation of your investors, of my investors, is that we're able to add enough value to that asset that not only gets them paid, but justifies us taking a portion of that as well. Right? Okay.
Yep.
So with that said, talk a little bit about that, right? Because it ties directly into your comment earlier.
So you have, okay. So this question gets me back on top of my soapbox. So,
well, I'm glad I was able to at least wake you up, Raj.
Yeah. So here's the thing. So another part of my background that I'd like to share with you and your audience is that I pursued financial independence, FIRE movement, very hard. You know what that is?
No, what is that?
It's financial independence and retire early. So if you're a passive income, your interest in dividends and rent collection, anything that you don't have to actively work for, things that you earn while you're sitting on your couch, streaming Netflix. That income is called passive income. And once you get your
I just got that, man. I just set in. I'm borrowing that one, Raj. Sometimes I could be a slow learner, but I just got that, okay?
Yeah, so once you get to your audiences, your audiences could be new, and they may not have as much background as you. So once your passive income is more than your lifestyle expenses, you have fired, your financial independence, and you can choose to retire early. Most people, when they hit that stage, they don't just sit idle, because these are kind of highly driven individuals.
Right.
So I pursued that on the back of stock market and stocks and, bonds and mutual funds. And I was a very disciplined investor. There are many people who did better than me, but there are far many people who did worse than me too. But when I came across real estate and the kind of returns that I was able to generate with real estate, and just as a beginner, far outpaced the returns on the stock market. So if your audiences are looking to create a life where they are financially comfortable, financially independent, then it is definitely more useful, more powerful to leverage the real estate than it is stock market. This is my soapbox, and I've been saying this for a while. Now, there are many people who don't have time, education, or the bandwidth to do investments on their own, right? So that's when people like you and me, the syndicators, come into the picture. So we do everything for you, the dear limited partner. And what we do is, for example, you pay for, you get your rent, you pay for operating expenses, insurance, taxes, repairs, water, sewer, trash, heating, cooling, capital expenses, property management, vacancy, name everything. And then you're left with net operating income, right? And after the NOI, you pay off the mortgage payments, and what you're left with is your profit, your net profit, which is called cash on cash too, and which is divvied up across all the investors, limited partners, general partners. And I don't know about, John, the kind of investments that you are doing, but you will agree with me that, it would not be a surprise in this industry to give back to the LPs 10, 11, 12, 13, 14, 15 kind of IRR.
Sure.
And try doing that on stock market. Try doing that in a way that is, tax efficient, and try doing that in a way where, it doesn't go like this from year to year. So it provides you a very solid asset class where you can go and see it and touch it and fondle it. It's there. It's real. It's not just ones and zeros floating in ether somewhere. You get tax benefits, and so many people have done it in a very predictable manner that I think that, going back to your question, John, and I think I'm answering the question, that it is something that people can definitely use and work with an established, honest, capable, skilled operator for their investments.
Yeah, no, I really appreciate you sharing that, right? Because the stock market has some advantages. And I think the biggest advantage is the liquidity component of the stock market, right? Mm-hmm. It's just a much more liquid market, okay? Yeah. But when you look at the real estate markets, I think what makes the real estate markets very unique, and I'm gonna say this now because we're coming into this cycle, is that real assets, they're a great way to chase inflation with, right? Mm-hmm. And we're in a cycle right now where we are starting to see inflation, and we're going to see a lot more of it just because we just had $2 trillion dumped into this market, right? You take $2 trillion and you pour it into a pot, that $2 trillion is going to overflow, right, into other different goods and services. And that's kind of what's happening now. A lot of money out there. So real assets is a great way to ride the inflation wave, okay? Real estate being one of them. Real meaning you can touch it, you can feel it, right? You can see it. They're tangible assets, right? Now, here's what I find really interesting, Raj, and you kind of commented on this, so I'm going to piggyback off of that, is financial freedom. Okay. I like how you put it. I love your acronym, Raj, and I think I'm going to borrow that one as well. Okay. But
sure.
Here's what I really like about that. You use the word pursue. Okay. You've pursued financial freedom for quite some time now. Now, the reason why I want to stress that is because to our passive investors out there, the reality is, okay, there are almost no investments that you can get into, okay, that are passive. And let me just qualify that a little bit. If you have a really good operator, right? The operator still has to go out there and produce a result. Okay. So ultimately what an investor is paying for is a skilled operator to produce them a result so they don't have to be the one out actually physically operating the asset or the business, right? And so, yes, it is passive to the passive investor, to the limited partner. But the reason why I want to talk about this a little bit, because, again, production requires time, it requires energy, and of course thirdly, it requires resources, right, or capital. Debt capital, equity capital, doesn't matter. But I think it's really important to talk about that, because you have to pursue, and I love that word, right? You have to pursue opportunity. But, right, and so if I were to place my money with you, those are little things that I look for, right? Because, usually someone's language will help you understand their experiences, right, and how they think. Language is a really good, indicator of, someone's abilities, right? Long term.
Yeah.
Because I think language will kind of reflect in how you think about opportunity. So I just wanted to touch on that because, we always have to pursue opportunities in this space. I think as a limited partner, for the partners that are listening out there, or for those that want to invest, understanding that you're actually looking to hire someone like Raj or myself when you're making an investment, ultimately what you're doing is you're hiring a skilled operator to be able to produce a return for you. And consequently, when those returns are achieved, they get paid as well. It's just a very unique opportunity, right?
Correct.
Okay, so let's fast forward a little bit. So you started in the world of corporate America, right? You came in with skills. You've built a lot of skills. You've learned a lot inside of corporate America. You've taken those disciplines now and you've mapped them over to being an entrepreneur. And so it's my understanding, Raj, that you've started a couple of companies as well, right? In addition to, taking your excess earnings and then deploying that into real estate, which you've done, and you've done and you're doing, and you're scaling yet another business, right? So talk a little bit about the businesses that you've created. What type of businesses and why those businesses?
Yeah, so that's a good question. So my entrepreneurial my position is it has two arms. One is the real estate arm, and one is the business acquisitions arm. So I'm looking to purchase businesses, just like you can buy real estate for cash flow, you can also buy small businesses for cash flow. So we are in the midst of silver tsunami, which is a phenomena that describes 10,000 baby boomers retiring every single day. And unlike the stocks or even real estate, you call that illiquid, and it is. But, if you have a business that you built from 1970s for the last 35, 40 years, and it's a baby now, it's hard for you to sell that thing because you cannot, click on a button and you can sell that thing, and you cannot give it to your kids because your kids want to work for a sexy company such as Facebook or Netflix or Amazon or Yahoo. I don't know if Yahoo is sexy anymore, but and they cannot give it to their employees for purchase because they may not. They're happy to work in the company, but they may not want to run that company, or they may not have capital. So there is this imbalance in this space where there are many more sellers than there are buyers. So it's a lifetime opportunity to create, wealth and create passive, not passive, but, good multiple streams of income. So I have been looking to purchase, businesses in education sector, some old fashioned, non-sexy, low multiples type of businesses where they're easy to get in and scale it up and kind of, purchase multiple businesses in the same sector and scale it up and create a portfolio of businesses and gain economies of scale. So that's another side of the business, and real estate is the other. And I'm looking to acquire in both the spaces right now. And, because it's COVID and it has just created a little bit of a unique dynamic. There are opportunities, but at the same time, the sellers are a little nervous that are they selling at the bottom, and buyers are a little nervous that are they getting the best value possible. So, but these are the two things that I'm trying to do right now.
Okay, so I really like what you said. I call it the buyer and seller paradox, right?
Yeah.
The buyer and seller paradox is, you described it really well, where sellers thinking that, hey, they still have a ramp, right? They still have runway. They still have more runway. And of course, the buyers thinking that, they're asking for too much runway. Okay. So how do you, I think sell is a good word, because at some level, we're all salespeople, right? So how do you sell against that? Or what is the value proposition to the seller, all right, to help come to a strike price? It's a little bit different when you have an in-between or a broker in the middle, because the broker is filtering the conversation, right? But if you're going directly to the seller, what does that conversation look like?
Yeah, that is a good question. So one thing that I would always say that number one is that I have my process. I have the numbers that I'm looking for, and I know what kind of returns a business or a real estate property can give me. That's not a big problem for me. And then what happens is when you've identified your prospect businesses to purchase, what you do is you start talking to them, and everybody's in a different situation. So they just went out, they just checked out, and they are already, vacationing in Bahamas. Their mind is there. Then somebody else would be like, no, they want to make sure that, the business continues and their legacy continues way long after they have executed the business already. So, what my value proposition is like, look, I am an outsider looking in. I don't know about the business as much as you do, but I know that in this business, we can create a win-win. We can give you the money that you need to exit the business. But at the same time, the way I will run this business is that I have these skills that I have picked up from the last 20 years of my work experience, and some of them is transferable, right? I'm going to do that. The second thing is that my philosophy is to run the business in a way that you would be proud of after you're gone. So we'll take care of your customers, we'll take care of your vendors, we'll take care of your employees. I'm not giving you a guarantee that they have a job for life. Nobody can give you that, but we will take care of the entire ecosystem of the people that you're working with. And we will ensure that you will have a space in the community after you're gone. So you will look back and you'll be proud of the business. And sometimes beyond dollars and cents, sometimes the sellers and the businessmen, it's important to them. So that is one way that you can differentiate yourself with the other people. And there's another thing that people probably don't realize, that if you're an honest person, and then if you have integrity, and if you're a trusted person, and if you treat people right, it comes across. People can smell it. Sure. People know. And right, and if people like doing business with you, they'll find ways to make the deal happen with you. I really think that that's the way to do business. You treat others the way you want to be treated. Such a cliche, John. You know that, but it's a cliche because it's so true. If that doesn't differentiate yourself, then probably look for another business.
Man, that is such great advice, right? Because it's simple, but you're right. It's very, very true. But inside of what you said, okay, there's a $1 million nugget inside of that conversation, all just by itself, because it's you can map that over to pretty much anything, right? Uh-huh. You can map that over to conversations with brokers. You can map that over the conversations with sellers. You can map that over the conversations with your team. Heck, your wife and kids, more importantly. Same thing, right? Same thing. And so, one of the things that I love about real estate and being an entrepreneur is you get to make, especially with apartment communities, it's one of the very few, I think, businesses where you actually get to influence a community. Right? And so you get to take your ideas and your values, and literally those things will start showing up inside of a community, especially over a 2-3 year period of time, right? So when I walk a property now, usually I can get a sense for, who the leadership is based on me walking the property and then me having a conversation with a manager. Not always, but usually you can get a pretty good feel, right? And it's just a reflection of, that person, their values and their leadership style. So Raj, inside of what you said, I mean, that is $1 million. I'm going to add another $1 million to it. That's a $2 million number. I don't think anyone has gone into the $2 million nugget range.
Yes. $2 million nugget.
$2 million nugget. All within 10 seconds of each other.
That's right. Yeah.
But I am so grateful to be able to have this conversation with you. So what other markets are you looking at, maybe looking for, that you can share with our audience? Because there's probably some folks out there that maybe would want to reach out and they have some opportunities that they can speak with you about.
I'll give you right now. My Atlanta, Nashville, Memphis, Tennessee, Little Rock, Miami, within the multifamily space, and we have also started to look at the industrials.
The industrial space, man, that market has been bid up.
Yeah.
more so than apartment buildings. So, industrial space, I think there's still some opportunities there, but it's also, it's all very competitive space right now.
But I feel like, industrials is the road less traveled. Everybody, starts from single family, then duplex, triplex, duplex.
Very true.
But industrials like, so Amazon would be my tenant. It's just like a different thought process.
Yeah. Yes. I think where the opportunities are right now in the industrial space is with tenants that are not as known, right? Where you have to do a little bit more underwriting, and where those people skills come into play to really uncover the strength of that tenant, because that information it's not public.
Yeah.
Like you can go to an Amazon and, you can pull their annual report, right? You can pull a lot of information that's provided out there that's reported, but you don't really get that a lot, when you're looking at acquiring smaller industrial properties. But I think that's where the opportunity is, because people are going to underwrite the tenants very differently, right? Especially if they're not providing financial information, or they don't have audited financial statements, for that matter.
Exactly.
They do have tax returns, but the tax returns won't always tell the whole story.
Exactly.
Nor do they have any obligation to give you their tax returns. So Raj, I want to thank you for being just a tremendous guest. You definitely hit the mark with the $1 million+ $1 million nugget. So right now you're setting a trend with value creation to our audience. You set the bar really high with the $2 million nugget mark. So with that said, Raj, again, thank you for being on. Really appreciate having you on. Before I ask you to share how people can get in touch with you, what is the one question that you have of me that you think can add some value to our audience, since I've been asking you questions for the last 40 minutes?
Talk to me about your life. Looking back, what are some of the things that have made you successful?
I think for me, really, it comes down to two things, if I'm being completely transparent. One is my failures, right? I think a lot of people don't want to talk about failures because there's this idea that when you only talk about your successes, it's kind of human nature, right? We only want to talk about our successes because it sounds cool and it makes us look cool, and we get to elevate our ego when we're doing that in front of people. But the reality is, success, however you define that, okay? Let's take the word success out. Let's take that out and let's use something else. Achievement, okay? Achievement, a little bit different, because you start point A. There's always 2 points. Okay, that's point A, and then the outcomes that you create in point B, and the time period can be very different, right? Sometimes that time period can be, in 2 years. Sometimes it could be in 5. Sometimes you have a 2-year business plan and it takes 10. Okay? But as long as you are willing to learn along the way, and I'm speaking to myself, as long as I have been willing to learn from those experiences and immediately take the greatest learning lesson out of them and apply it to the next experience, all you do is you compound all those lessons, right? It's the equivalent of a PhD, man, as long as you're learning from that stuff. Yeah. And now I've just gotten very good at accelerating that, right? Now I do it every day. I do it every week. I do it every year. So it's just the ability to compound all your interactions and your learning experience every day, dealing with people, dealing in business, and finding a way to take the most valuable learning lesson out of that interaction, that experience, and adding it to your database value, right? So that at some point I can redeploy that, capital literally back into some type of interaction, business transaction, okay, with my kids, with my wife. That has been the most valuable to me. That's the most valuable, is my failures, but my ability to learn from them and immediately apply that forward, right? And I've had some very expensive ones, by the way. I call them very expensive seminars. I've had some very expensive ones, but I've learned from them. Thank God for that. And then the second one really is just people, right? I think when I was younger, I actually just had this conversation with a broker today, someone that I actually have an offer out to, and that's why. So our audience, you're probably wondering, why the heck can't I see you? Well, I'm traveling, I'm in a hotel, and I didn't plan properly. But really, people would be, I think, the second priority behind that, and that is not just people, but just treating everybody with respect and dignity, right? We don't have to agree. We don't have to agree on anything for that matter. But again, it's just treating people with respect, dignity. And you mentioned this earlier, right? Treating people the way you want to be treated. But I think that's a really valuable one because, we're coming into an environment today, which I think will give a couple of people an advantage, especially as we start to kind of speed up. And that is that, kind of a unique environment that we're in, right? And that is most people, when you have a conversation with them, and it's a very difficult conversation, what can oftentimes come out of that is usually there's a disconnect now between the two parties, right? They don't want to talk to each other, right? There's a lot of tension. People get upset, and things break apart. They break down. Well, I think that's the opportunity, right? When you can have very difficult conversations with people and still respect and treat them with dignity, even if you don't agree, and you can step back from that conversation and still not agree, but still find ways to, move forward and be friends for that matter, right? I think, man, there's a lot of value in that. And so those two things for me have been, I want to say probably when I look back from where I am today, because 5 years from now, I know that's going to change, but for where I am today, those have been really, really valuable.
I love it.
So Raj, thank you so much for being on, and I'm really grateful for that question. What is the best way for people to reach out to you and find you out there?
Yes, so I am at bigleague-capital.com. Big League as in baseball.
Oh, okay.
Bigleague-capital.com. And I'm also at 267-551-0529.
Okay, awesome. But I want to thank you again for being just a great guest, for setting the bar high with a new $2 million value standard. And I look forward to your continued success. And also, I'd like to welcome you to the extended network of the We Build Great Apartment Community Extended Network. So if there's something that, I can help you with, happy to try. If I can't, I can definitely connect you to the many, the couple hundred people at this point in this network, and happy to definitely do that.
That would be lovely, John. And thank you so much. Pleasure being here. And I wish you and your audiences continued success.
I really appreciate it, Raj. Thank you so much. And I want to wish you continued success.
Thank you.
Okay, bye. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.